Hi everyone, in this video let's discuss about tax audit. First we will begin with applicability and then we will discuss the mnemonics and then we will end by discussing the concept of a revision in tax audit report. Okay, without any further delay, let's move on to the topic. Applicability. When the business turnover exceeds rupees 1 crore, tax audit will be applicable, and the business when turnover exceeds rupees 10 crore, if the cash receipts is less than 5% of the gross receipts and cash payment is less than 5% of the gross payment, business under section 44AE, 44BB and 44BBB, when it claims a lower profits, business under section 44AD, the income exceeds maximum amount not chargeable to tax, profession gross receipts exceeds rupees 50 lakhs, profession under section 44ADA, when it claims lower profits and income exceeds maximum amount not chargeable to tax. So let's proceed with understanding the mnemonics. So for clause 1 to 10, it is NAP, G, SPA, 44 PN. Okay, NAP, G, SPA, 44 PN. NAP, name, address, and PAN. Name of the SSC, address of the SSC, PAN of the SSC. Now, G for GSTIN or related indirect taxes registration numbers. Now, SPA, status, previous year, assessment year. Status, previous year, assessment year. 44. Like we have 8, like 4 plus 4. So, 44 AB. The tax section under which tax rate is getting applied. Okay, applicable. Now, P for partnership profit sharing ratio. If there is any change, we have to disclose the same. N for nature of business, related sector and subsector. Okay, let's revise. NAP, G, SPA, 44 PN. Name, address, PAN, GSTIN, status, previous year, assessment year, 44 AB, partnership PSR, nature of business. Now, from now on, it will be in order of A, B, C, D. Okay, alphabetical order. Okay, and I will give some examples. Don't validate it, just enjoy it. Okay, now A for Apple, right? In Apple, we are maintaining the books of accounts. Okay, in Apple, we are maintaining the books of accounts. So A, clause 11 deals with books of accounts. Okay, B, ball. Ball, we are going to presume the size. Okay, that's why it is for presumptive income. So 12 will be for presumptive income. C for cat. We are doubt whether it is domestic cat or. So we are discussing about the two types of accounting. That is method of accounting, mercantile or cash system. Okay. D. We have heard this dog story, right? It will check in the river with its bone in its mouth, and it will think there is other bone, and it will lose that one bone also. So last bone also it lost. So closing stock. So D for closing stock. Okay. E. Elephant, right? Elephant has its ivory in it. Okay. That ivory is now being sold. So capital asset is converted into stock in trade. Okay. A for Apple. I'm going to maintain books of accounts in Apple. Okay. And then B. Ball. I'm going to presume the size of the ball. So presumptive income. C. I'm doubting the type of the cat. So method of accounting. D. Last bone of the dog. Closing stock. A. Elephant's ivory. Closing capital asset converted into stock in trade. Great. Let's move on. 16 to 20. F. Fishing credits. I think PNL is not properly credited. Okay. PNL not credited. Then G. G is for. Yeah. Jameen has sold all his assets. There is a Jameen in our town. He has sold all his assets. So land and building whose selling price is less than stamp duty value. He has sold all his assets at less than stamp duty value. Oh no, I have to make note of that fact. So land and building selling price is less than stamp duty value. H for horse. It has become old now. Now what happened? It is fully depreciated, right? Horse which has become old can be said as fully depreciated. Okay. Now I for ice cream. I've bought an ice cream. I thought I will go and have it at home. I just came running home. It starts melting. So what? When I come to home, it is very low quantity. It is short debited or there will not be any ice cream at all. So it is not debited. Short debited or not debited. J for the boss thinks the employees are jokers. And that's why I'm going to just pay them whatever I think. He thinks like that. Employees are not jokers, right? That's why we are going to Make the disclose the facts here. Bonus, commission, or any amount paid to employee which is not paid within the respective dates. Like that. Okay. Now let's revise. F for fishy credits. P&L not credited. Or then G for Jamin has sold all his assets less than stamp duty value. So land and building, so a selling price is less than stamp duty value. H for horse has become old now, so it is fully depreciated. I came running with ice cream to home, but it is not there when I reached home. So short debited or not debited. J, boss thinks the employees are joker, but income tax says employees are not jokers. That's why I'm going to disclose the facts here. Bonus and commission. Now, let's move on. 21 25. Okay. Imagine there's an event of Pongal. I'm start flying the kites. Okay, I'll write my name. Everybody reads it. That's an advertisement for me. This is Anusha's kite. Or somebody's kite, right? It's an advertisement. So expenses with respect to advertisement, interest, and penalties will be shown here. We also discuss this very important clause. Please do check it out. Okay. Now, L. L means who? There, in olden days, we have heard that our elders have read in street lights, but still there are some companies which are very much in pressure, right? So who are those? MSME. So in order to relieve them, the government has come with this clause. MSME, street lights. They are reading in street lights. They are working in street lights. That's why MSME. Now M. M for Bandar, monkey, right? So related parties. We are going to relate it closely with them. We are going to dance with them, right? So related parties. N. N for Nestle. Nestle deals with tea, coffee. So we add rubber with it. Okay, specified business. Tea, coffee, and rubber with deductions, right? Now, or for omission cessation of certain items, including the bad debts recovery. Including the bad debts recovery. Let's revise. Okay, I'm going to fly a kite, so I'm going to advertise myself. That's why expenses with relates to advertisement, interest, and penalty. L for I'm going to read at street light. Who does the same with me? MSME. Great. M for monkey. Who I'm going to dance in my business, the related parties. And for Nestle, he deals with tea, coffee, and a rubber. Now, O for omission cessation, including bad debts recovery. Let's move on. 26 30. P. Allowed on payment basis. Only those expenses are allowed on payment basis. Q. Q for what we have learned, queen, right? Queen. But now we can't find any queens. That's why it is a prior period item. Prior period item. R for rat, right? Rat eats everything. If you keep a cheese, rat eats the same. Okay, you don't have anything now. So no or inadequate consideration. You don't have any consideration for buying that, right? You could have ate it, but now rat has ate everything. So you don't have anything. So no or inadequate consideration. Yes, for income from other sources. Income from other sources. Okay, it has some different things. 29 S. Okay, income for other sources. Now, it could be issue price of shares is greater than fair market value. 29A could be A, advance forfeited. B, receipts chargeable without consideration or inadequate consideration. Okay. Now, T. T for transfer pricing. Right. Transfer pricing. We have 92 CE in 30A and interest limit in 30B. Let's revise. P, allowed on payment basis. Q, prior period item. Because queen is a prior period item. R, rat, it has ate everything. I don't have anything, so no consideration or inadequate consideration. Yes, income from other sources. Issue price is greater than of shares is greater than its fair market value, or advance forfeited, or receipt chargeable without consideration. T, We have transfer pricing. 30A could be 90 into CE, and 30B is interest limit. Let's move on. What happened? They suddenly announced demonetization now again. Okay, so big businessman carries all his cash now in umbrellas. Okay, U for umbrella carries all the cash. What does it mean? It is for cash transactions. Okay, we for ban. In ban, they brought forward depreciation, the speculation, business losses, specified business losses. Okay, in one I'm going to load brought forward depreciation, specified business losses, speculation, business losses. Okay, W, watch. See, the government is saying, please keep track on your deduction. Keep an eye on your deduction. So you're going to watch your deductions. Okay, that's right. Chapter 6A and Chapter 3 deduction. Yes, it's in the mark like no, right? So no TDS, no deduction. No TDS, no deduction. Why? Why for yuck, right? It is used to carry things. So we are going to carry the raw materials and the other goods, that is stocks and trades or other stocks. Okay, details of raw material and other stocks. It said, who is going to get lastly paid in any company? Who is going to get lastly paid in any company? The equity shareholders. What is the payment? Dividend. So that is details of deemed dividend. Details of deemed dividend. Let's revise. You're going to carry all the cash in umbrellas now. So it is related to cash transaction. In the van, I'm going to load the brought forward depreciation, speculation, business losses, specified business losses, everything. W. Chapter 6A deductions and Chapter 3 deduction. Have to keep a watch on it. Okay, now X. Say no to without TDS. You have no deductions. Now, why? You're going to carry all the stocks in a yacht. That is raw materials and other goods. Now, instead, equity shareholders are getting lastly paid. Is paid by way of dividends. So, details of deemed dividends. Now, 37, 38, 39. Cost, excise, and audit. Cost audit, excise audit, and service tax audit. So the last 5 you have to remember. Okay, accounting ratio, demand and refund, SFT, CBCR, BEPS, breakup of expenditure, GST. Accounting ratio, demand/refund, SFT, CBCR/BEPS, breakup of expenses, GST. Let's repeat. Accounting ratio, demand/refund, SFT, CBCR, BEPS, breakup of expenses, -GST. So let's recall once again. Okay, name and name, address, PAN, GSTIN, SPA, status, previous year, assessment year, 44PN, 44AB, partnership, PSR, nature of business, A, B, C, D, E. A for books of accounts, B for presumptive income, C for method of accounting, D for closing stock, E for capital is converted into stock in trade, F for P&L credit not credited, G for land and building sold at less than stamp duty value, H for fully depreciated, I for short debit or not debited, J for bonus or commission, K for expenses, advertisement, interest or penalty, L for MSME, M for related parties, N for tea, coffee and rubber, O for omission or cessation including the bad debts recovery, P for allowed on payment basis, Q for prior period item, R for no or inadequate consideration, S for sources issue price of shares is greater than fair market value, advance forfeited or receives chargeable without consideration. T for transfer pricing, 92 CE and interest limit, and U for cash transaction, B for brought forward depreciation, speculation / specified business losses, W for chapter 6A and chapter 3 reductions, X for no TDS, no deduction, Y for details of raw material and goods, Z for details of deemed dividend, cost audit, excise and service tax audit, and accounting ratio, demand/refund, SFT, CBCR and BAPS, and breakup of expenditure under GST. In this tax audit, what are things I have to do? Based on auditor, I have to discuss. Now, what are things I have to sign it? Name, address, membership number, firm registration number, place, date, and sign in DSA, stamp and seal with UDIN. Okay? Now, the last part of the deal. Revision of tax audit report, in which cases it's applicable. Revision of accounts of the company after adoption in AGM. Change in law with retrospective effect and change in interpretation of law. In only these cases, revision of tax audit report is permissible. So with this, we have completed tax audit related points. Thank you.